And then tweet the shit out. All right, we are live here with Mr. Gregory Rocco. Hey, kid, thanks for coming.
Hey, man, thanks for having me. Happy to be
on you. So this is Long Reads Live number 3, and for those of you who haven't been here before, the idea is basically just to get some of the most interesting people that I can find in crypto to talk about the interesting things happening in crypto. And luckily for us, today has had no shortage of interesting things. So we are actually broadcasting, or rather, Greg is coming from the Block in New York, which is, for those of you who don't know, which I can't imagine as many of you at this point, a new publication, media company, doing a ton of different stuff, putting a real stamp on top tier, like no bullshit reporting and investigative sort of journalism. And they also have a community working space based in a WeWork in Tribeca, right? And so this is their housewarming party. And last week, as I was starting to get prepped for this week, everyone that I was asking to come join the show was going to this party. So we said, hey, screw it, let's actually broadcast from there. So Rocco graciously agreed to play Major D for the evening. So let's hear a little bit about you, man. Tell me your story.
Yeah, so discovered Bitcoin a number of years ago. Everyone has that kind of origin story where they had this aha moment where they discovered Bitcoin, its uses, and everyone falls down the rabbit hole because it's so multidisciplinary. Eventually, I was working in media at the time. Background's actually in modernist literature, but the craziness I kind of figured that now the craziness of modernist literature can apply to the drama and comedy of this entire space. Eventually left the media job to work for a company called InvestFeed. Started writing for a little bit here and there for CCN, Bitcoinist. Started working with a couple projects on communication, eventually led into mechanism design, and currently now I'm at Consensus, working on mechanism design for Token Foundry and Consensus proper.
Nice. So you basically live, eat, and breathe the interesting mechanism design. Is this, how long have you guys been using that language versus sort of just token design?
I guess it's kind of a combination of both. I'm of the mind that we need to move away from like generalizing everything and using the word crypto economics. Mm-hmm. Because I have not met someone yet who is both a cryptography PhD and an economics PhD. But I'm a bigger fan of token design and mechanism design, like having the constraints and then developing the system to get participants to do a certain thing based on how you set up the system.
No, I think that makes tons of sense, because really what we're talking about, like tokens are shorthand for units of something that can either exchange value in some way that incentivizes behavior or do something else that incentivizes behavior. Like ultimately we're talking about experiments and can we organize people differently? Can we set up networks in different ways with different constraints and get people to do things, right? And so, although the token may be token may be the sort of unit, the real thing is the mechanism behind it. So that I mean, it's a perfect segue to kind of one of the reasons that I wanted to have you in today is there's a ton of stuff to talk about. Obviously today we've got crazy Tether insanity happening, although it seems like it's kind of stabilizing, but we'll see. We have Fidelity coming in. Like there's a ton of news going on, but I wanted to almost set the stage from like what has been going on in 2018 and how we got here. And so you've obviously watched a huge progression of the way that people think about tokens, think about mechanisms, think about just the new opportunities of this crypto space. Give us your assessment. You wrote a piece this week called Futility Tokens. What's the TLDR on that piece?
The TLDR on futility tokens is taking a lot of what we saw in 2017, where we had a massive speculation bubble of ICOs popping up. A lot of companies simply, well, actually as a primer, a lot of the efforts in tokenization, I'll be the first person to say don't tokenize. They're very, 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 very specific use cases for tokens, but it's like first have a business case, then do you need blockchain, yes or no? And then after that, do you even need a token, so on. But the idea with utility tokens was a lot of these companies in 2017 that capitalized on this utility token boom and purchasers of these utility tokens didn't kind of know what they were getting themselves into, bought it up. There were crazy outsized returns. And what was happening was all these tokens that these companies were creating, they were all trying to be the new de facto payments token of their own system. They weren't using existing assets like Bitcoin or Ethereum that have enough liquidity, to actually move around these systems. They wanted to have a payment token for their own system. Like, you want access to the service, you have to use our proprietary token. And people thought, oh, it could be like the de facto currency of dog food. They're going to put dog food on the blockchain. We're going to pay for all our dog food in dog food token. But people weren't paying attention to that these payment tokens suffer from velocity issues, like it's being spent too quickly. No one's holding on to it at all. And these ecosystems are also realizing, hey, this token adds a lot of friction to our entire system. We should probably start getting rid of it if we ever want to succeed in the future. Like, we have to replace it with something that's even more liquid, or not have people use this token at all. And the futility tokens are these companies that are realizing this now in 2018 as the market settles and the market goes down, and are saying, hey, how do we kind of get rid of this token, either through creating security out of it, like giving holders an equity stake in the company, or just discontinuing the asset altogether and what we can do about it.
So it's kind of the pattern that you're noticing. The emerging narrative is companies who are trying to almost front run really severe, legal or regulatory scrutiny around utility tokens to get out without, maybe everyone's taking a haircut, but at least they're coming out with their heads, kind of a thing.
Exactly, and that's what I see. Part of the article I put at the bottom of this is regulatory clarity is slowly coming together. These companies are realizing, hey, we might have not done this right. How can we exit it? How can we control the narrative in this? How can we both exit this cleanly, take care of the people who are holding the tokens, and keep our reputations clean in a way that we can move on to other projects in the ecosystem without damaging ourselves too much. And the 4 companies that I wrote about, each in their own way had a different exit for it. And one of the ones I noticed that really played on that narrative control was Co-Founded, which was back in 2017. They were going to be this incubator for blockchain projects. Co-Founded was going to host a sale, and the token acted as this priority pass. You had the ability to actually participate in the sales if you own your tokens. But the way they controlled the narrative was they were hey, we realize that this business isn't working out. We want to exit in this. We want to have this creative destruction of Co-Founded and give back to the community. But it turns out that what they had in their treasuries, because in 2017, if you raised early enough, you have all these assets that are worth way more than they were when you initially raised, or if you played the markets right, they actually had more in assets than they did in liabilities and the entire market capitalization of Co-Founded token, with still some left to spare, so they can have an exit where they give their participants hey, we'll pay for your tokens, we'll give you the exit, we'll pay for it. And they're able to kind of clean themselves up in that way and have this narrative control where they could just leave and move on to something different. Whereas if we're talking about now about tokens being structured in different ways, where if this was truly a security in when they initially raised, it would have actually potentially been a way better model, because Co-Founded's incubating all these projects. A security token that potentially gave you equity in these projects, or a dividend in the form of all the utility tokens that they're incubating, might have been a more interesting play. Which is also included in the post of alternative futures, what these companies could have done. But yeah, all these companies in their own way are either trying to control the narrative, either buying back the tokens, converting the tokens in some way, or even going the security route of hey, your tokens are now worth equity in the company. We're retiring it for the sake of the ecosystem. We want to make our product that much better, and then we're going to just remove this token and just give you equity in the company, because you bet on the success of us before. Now you're really betting on the success of us now because you have skin in the game for our company.
Yeah, it's interesting. So one of the things that I think about a lot, and I had asked you this question before, is, to me, so the question that I had asked you is, do you think this is the beginning of new experimentation with equity-like structures, or really just cleanup phase? And your answer was kind of cleanup phase from the last. But it is really interesting to me that, when we're talking about tokens, these are units that can be used to incentivize behavior in different ways. And really, there's kind of a spectrum of different properties that they could have, with better money on the one end and better equity on the other end. And what we were talking about before is that there's actually a lot of limitations to how equity is structured in Silicon Valley, in terms of how liquid it is and in terms of how long you have. There's all these challenges that make it more or less irrelevant in a lot of ways for to make people feel like they're really incentivized. And so it does seem like there's this interesting opportunity to be doing that experimenting. But you really feel that this is that, to the extent that that happens, that's coming next. It's not there yet, and this is just the end of the last wave.
Yeah, I think there are ways you can have.
What's up, Larry?
I was about to say we have our first in studio guest coming in from the party. Is like definitely over 100 people out here.
Yeah.
So
pretty hectic so far.
Yeah. But yeah, I'm still erring on the side of kind of that creative destruction, as co-founded put it, this narrative control, this kind of exit. I think we are going to see better ways of structuring with security tokens in the future, but I don't think a lot of them will come from these conversions. I think a lot of conversions are still going to remain this kind of, we found a way to exit cleanly, we saved our own reputations, maybe we can move on to other systems, because at the end of the day, this is a very sentiment-driven space. It's very dramatic. It's all about the narrative. It's all about this kind of speculation. I don't think we've seen it yet where you're going to have someone convert it to a more meaningful, like doing it for a more meaningful way other than narrative control.
Yeah, no, so it's interesting. So I think it's kind of a cool setup. Like basically, it feels like right now where we are in the market life cycle is kind of the reckoning, and that it's somewhere between cleanup if you can and implosion on the other end, right? And so obviously that has been the story of Tether in the last, well, forever, but especially kind of coming in the last week or so. So for those of you who don't have any background on what's been happening with Tether, over the course of the sort of like, I guess a few key events, and then I'll bring in Larry, who has been tracking this like no one else in the space. So September happens, and all of a sudden you have all these regulatory compliant stablecoins launch, right? Like the entire market, there's now a sea of stablecoin options, right? So this is thing one that's happened. Simultaneously, towards the end of the month, you start to see the visibility, let's say, because the narrative or the rumor was floating around for a lot of the summer that Noble Bank, a bank out of Puerto Rico that was specifically kind of trying to be crypto friendly, was in trouble. There started to be rumors towards the very end of September that it was going to go under, and its biggest client, or one of its biggest clients, was Bitfinex and Tether. So that added to the sort of Tether intrigue. Then all of a sudden you see that they've parted ways, and there's merit to the rumor, I guess. So now we're at the beginning of October. Larry, tell us, like, kind of bring us through what happened from there to over the last couple of days.
Right. So initially, there was this. I basically found out that Bitfinex was banking through HSBC, and as soon as I figured it out, I reported it. I posted it on Twitter, and basically it took, I think, 2 or 3 days for Bitfinex to get shut down from that bank, because they were banking through a private company. They have a history of doing that. In the past, they banked through, I think, 4 or 5 different shell companies. They gotten bank partnership from Portugal, in Germany, Poland, all these small banks that they've been banking with. But the issue is that the banks are not usually aware that they're banking Bitfinex. So as soon as I reported, HSBC probably figured out that what was going on, and they pretty soon cut them off. That I think on October 11th, they finally cut off the deposits from this bank. And the reason how I found out about it is that one of the sources that I often talk to, he basically told me, like, look, like, there's something weird going on Binance, on the markets that they have. They have the True USD pair and the Paxos pair, and he told me, like, there is something weird going on. The price spiked a lot in a short period of time, and and he asked me, like, why do you think that happened? And I told him, like, I'm not really sure, but I think it's worth investigating. And as soon as that happened, I started looking into what's going on. And I think 4 or 5 hours later, I realized that HSBC finally cut them off, that they basically paused all the deposits from USD accounts, Euro accounts, all of the fiat deposits they cut off. And ever since then, it's, the situation, the uncertainty. Yeah. more people are coming in.
Sorry, yeah, we're gonna have to figure out how to squeeze in.
Yeah.
I kind of thought I thought we'd have a little bit more room from the pictures that they had sent because I'm an idiot. So this, we'll figure it out from this side though, I think.
Yeah. So
hey, welcome, Amanda. Just quickly before Larry, before you continue, Larry, can we just Amanda? I'd love for you to introduce yourself. Thank you so much for joining us.
Yeah, thanks for having me. So I'm Amanda Frankel. I'm the Associate Director of Investments at Stoic Capital. So I primarily do early stage, long-term strategic investing in blockchain and crypto projects. So we're blockchain and crypto only. And I'm also very short in comparison. I like need a booster.
Amazing. Cool. All right. So Amanda, when I was riffing with you before, we were talking about things to talk about. You seemed excited to dig into this Tether stuff as well. So basically, where we were was just kind of setting the stage, bringing it up to speed, where all of a sudden Tether starts losing its peg in a major way. People are starting to evacuate to different currencies, which is kind of like over the weekend. This is when this really picked up. Yeah.
Yeah. I mean. So just so you know, like for perspective, I've been like lurking under a bridge since November of last year, like waiting for Tether to fall like a gremlin. So this is like it's a very exciting moment for me. But
I think it's regained its peg since.
Yeah, it's not.
I saw that as I was standing up there.
I think now it's only like 2 or 3% discount, right?
But well, I'm still going to operate under the assumption that Tether is not going to be around for much longer.
I mean, I agree with that, and I think especially like what most people are not realizing now that you have the regulated stablecoins on all these large unregulated exchanges like Binance, OKEx, all these exchanges. Now, when you have these two options, the rational person is always going to pick the one that's regulated and that's guaranteed to actually hold the reserves and that's frequently audited. So in my opinion, there will always have to be a premium between a regulated stablecoin and Tether. There will always be some kind of a premium. The question is how large it will be. But if you look at it from just a market perspective, a rational person would rather hold a regulated stablecoin that is guaranteed to hold the peg than Tether, which is a complete unknown. They've had history of being very opaque, very dishonest in many ways. They keep claiming that they cannot get audited because no auditors will touch them. Yet you have all these regulated stablecoins that have gotten top 25 auditing firms. They have been able to get audits, monthly audits. So I'm not really sure what the issue is there.
Well, I think it's probably there's a lot of commingling of funds between Bitfinex and Tether, right? So when you think about, I mean, I'm not an accountant, but if I'm thinking of it as an auditor perspective, let's say I'm looking at EY, I wouldn't want to take on that level of risk because there's so many. There's so much commingling of funds. They've moved around to different places. There's a lot of accounts. They use multiple shell companies. So as an auditor, I wouldn't want that responsibility on my plate. I think if maybe they brought on someone maybe early on to audit before.
But they did have a company, right?
But it wasn't an actual audit company, right?
No, they did. They did.
The ones that left.
Yeah, the one that they basically fired them for like no apparent reason. They
probably found out that they didn't have.
Yeah, it's just, I mean, the whole situation is just. Like either way you look at it, there's something going on that people don't know about. I mean, it doesn't mean that Tether is going to collapse tomorrow. It doesn't mean it's going to collapse anytime soon. But there is something going on that will most likely cause it to go away at some point in the future because they just can't compete against something that's regulated, something that's 100% backed and always backed. In my opinion.
So Amanda, I want to actually, since you said you kind of have been watching this since last November, do you think that, kind of picking up from where Larry was in terms of competition, do you think that part of why this is happening now is not just the sort of the banking woes, but the fact that the market is now actually offering alternatives that can play the same type of role? Like maybe we were able to deal with this before because it played an essential enough function in the ecosystem that we were all willing to like kind of like look the other way, but now there's just other options that are better.
I definitely think so. I mean, look, if you think of us just as people, we tend to be extremely complacent, and people try to go the easiest route. And so the reason Tether, as an unregulated stablecoin, was able to be so successful is because it was the easiest way for people to gain access to these markets through using Tether. And now when you think about it, like, so my ideal version, you know, I worked at Credit Suisse before this, so I have a strong institutional financial background. My ideal version of a stable coin is you put in $1, stable coin comes out. You take out $1, that stable coin is earned. I don't think ever in the history of Tether we've seen the total volume of Tether outstanding decrease.
It's ridiculous. Like if you look at in the bear market, all the volume and everything is decreasing, and the only thing that's increasing is Tether. Like that to me is completely ridiculous. And especially when there's less demand for trading, and the amount outstanding is exactly the same. Like it hasn't changed at all in the past like 2 or 3 months, right?
Yeah, especially when you look at Tether thematically, you know, within the crypto ecosystem. You would think that there would be fewer Tether in circulation if people are pulling their money out of crypto, and especially when you think about the type of people who are pulling their money out of crypto, it's a lot of potentially uneducated retail investors who were burned in the big drop-off since, you know, the highs in January. And if you think about the audience of Tether, it's also potentially uneducated retail investors who are looking for an easy way into the system to make money. And so if you say, well, you know, if A equals B and B equals C, but like we're missing something in this equation here, because you would expect that if it's the same people making the same kind of decision, the same impact would be felt for Tether, and it doesn't seem to have been. Which for me is what makes me kind of question whether or not it's fully backed. And I mean, this is a question we can speculate on all day long. None of us will ever know if Tether is fully backed or not. So I guess there's no one question of that.
Yeah.
The other main question is whether or not it's fully backed. Like, do we think that they can actually get the banking infrastructure and banking relationship to allow people to exit if they want to?
At the end of the day, if nothing ever happens, someone's got to be left holding the bag. That's the problem. And I think Kraken came out with like another statement that was like, yeah, you know, your liability's on you if something implodes at the end of the day.
I admire Kraken's like the intensity with which they respond to things. But like at some point they have to be like, these are our friends though. So let's do a little like hot take. Do you guys think regardless of whether they recover in the short term, do you think that sort of Tether's fate is sealed now relative to the market? Do you think that there's going to be either like a real implosion or a gradual flight to other assets? And then I guess so that's part one of the question. Then part two is, what are the ramifications for crypto? Like, what's the systemic ramification beyond just like sucks for people who lost money in Tether, you know, should it fail?
I'll go first. So I definitely think that yes, Tether is done. Based on the fact that we're now seeing Tether trading up after today, like it might be more of a slow implosion. I think that, you know, when I look at the broader ramifications in the crypto ecosystem, it's kind of interesting because when you look at the big run up in December of last year, a lot of people have made a lot of, I don't know if it's causation or correlation, but there's a strong relationship between the strong increase in the price of Bitcoin and the increase in Tether volumes. And so there was a big price increase, but then now today, when people are trying to get out of Tether, you see a price increase. So the part of me that wants to say, well, this will have systemic ramifications in theory, that could work, but in practice, it seems, you know, Tether goes well, Bitcoin went up. Tether's doing badly now, Bitcoin went up again because of like the security. So I don't really know.
Yeah, I was going to say, I think a lot of it is back when, you know, there weren't other regulated stablecoins. The narrative, I think, was around Tether imploding and then like confidence in the markets being lost because you have all this Tether printing, Bitcoin's going up. So obviously, if the system fails, it'll collapse. But I think we've seen that even if, let's say, you know, for all intents and purposes, let's hypothetically Tether is solvent. I think first off, you'll see that everyone will move to another fully audited, regulated stablecoin because at the end of the day, Tether's still built on Omni. There's still a centralization risk there. It's like having a centralized stablecoin, but like all the risk of non-centralized. So I think there's still going to be this migration to regulated stablecoins, and I think even if Tether does implode, that you won't really see too much of an impact on the market, to be frank, because it's that exit to Bitcoin at the end of the day that's still going to keep the market afloat. Bitcoin obviously I still think Bitcoin's the market leader in this case. I think honestly everything will be fine. It's just this migration to other regulated and audited stablecoins. And if you want the decentralized option, so to speak, air quotes, just go to DAI. If you want a crypto collateralized stablecoin for the sake of that.
I personally don't agree with that as much, because I think, I know CZ tweeted about this as well. Like, it's, even if Tether imploded right now, the shift to regulated stablecoins will be slow, because you have these stablecoins. I think Paxos has the highest market cap right now, and they have about 25 million issued, maybe even less. Like that's nothing. That's gonna take forever. Forever to actually ramp up. That's not going to be a switch overnight. That Binance is going to say, "Oh, we delist all the Tether and we replace it with Paxos, or we replace it with True USD." That's not just going to happen like that. So, in my opinion, it's going to be, if it happens, it's going to be a slow transition.
There's been a lot of news today about today and yesterday about exchanges listing additional regulated stablecoins.
For sure, but they still only have, like, combined, I think all the stable coins combined, if you combine TrueUSD, Paxos, Circle, and Gemini, they all have like 140 million issued, and that's compared to 3 billion of Tether. Like that's a drop in the ocean. And it's going to take a long time, in my opinion, to fix this and to actually switch to regulated stablecoins. One more thing I would like to add, like, I'm not sure many people actually realize, but one disadvantage in quotation marks with regulated stablecoins is that they're regulated. So if there is a suspicion of any illegal activity, if there is anything that's in some way suspected that maybe the money was involved in money laundering, maybe it was involved in theft or something, it will be frozen. It can be taken from people. So that's one thing that hasn't happened yet, but it can happen for all of these. It can happen for Circle USD, it can happen for Gemini, and it can happen for Paxos. And when this happens, I think this could also, like, maybe even slow down the adoption a little bit more, because people will realize that even though they own the asset, they own the ERC20 token, they'll be useless if someone steps in and says that they're invalid. And all of these stablecoins have this ability. The only one I think that probably doesn't is TrueUSD. They're regulated as MSB, but they're not regulated by the New York's regulator, which is the most drastic one. The conditions that they listed are they're very tough, in my opinion. Like, I think people should get more educated about all the conditions that regulated stablecoins had to comply with, and they should read into all the disclosures, because if the money that they hold is suspected in anything, it will be taken away. That's pretty clear.
Well, but do you ever think about a shift in the audience of regulated versus unregulated stablecoins? So I've always, and maybe my thesis is incorrect, I've always operated under a thesis that a lot of the people who are using stablecoins like Tether is uneducated retail. And while there is a retail component to regulated stablecoins, when you hear big news like today with people like Fidelity getting into, I don't want to jump the gun on that one, but it all aligns to a bigger story of institutions are getting more comfortable if they do need some sort of like intermediary. That's the perfect audience. And I mean, you say that current stablecoin market compared to, or the current non-Tether stablecoin market compared to Tether is a drop in the ocean, but crypto as an investable asset class is still a drop in the ocean.
For sure.
Compared to institutional money. So if they decide that they want to use one of these regulated stablecoins, but I think it's highly likely in the next few years.
I agree, yeah.
Have you seen the emergence of, like, all these USD markets that Bittrex is opening up, even with a bit license, and also Coinbase is adding assets, Gemini is adding against USD pairs. So there's still exposure to non-stable coins too, just to straight USD.
Yeah, it's interesting. I feel like part of, and this kind of actually is both of what you guys are saying. One of the things that this whole kind of process has brought up is expanding and getting more specific about what the different uses and functions of a stablecoin are, and being able to more accurately, like, understand what the trade-offs of different types of, or different approaches to stablecoins are, right? Like, we've kind of moved away from this monolithic idea, or at least we're starting to, of this is a stablecoin and it's stable and it just is a useful, pair for exchange trading or whatever, to, well, this is for, you know, I mean, the multi-coin guys have been really vociferous about their kind of like why they think it's so significant to have basically a better version of the US dollar available worldwide, right? And this is a very different use case than obviously some of the sort of like algorithmic stable coins. So it feels to me like kind of part of this is just that we're maturing in our understanding of what we're actually using this type of asset for. But I think, Larry, it sounds to me like kind of part of your point, though, is maybe to be a little skeptical of the so much aggressive cheerleader for this new regulated version without really understanding what the trade-offs are in that regulation.
I mean, I think it's perfectly fine. I just think that not many people realize the trade-offs, and not many people realize that that can actually happen. If there's any suspicion, it can be taken away with pretty much no alert. It'll just be taken away. That's not going to happen with Tether. Like as unregulated as they are, that's one of the reasons why people use them, right? Because they're pretty much untouchable so far.
There's still centralization. Although, maybe this is like a bad joke, but have you guys watched South Park? Has everybody seen? There's an episode of South Park called The Human Centipede, where like they can't get the people to read the terms and conditions. And I think they're talking about with stablecoins, it's indicative of bigger issues in the crypto ecosystem where people don't bank on anything they do and wind up getting fucked.
100%.
There's irony to
I cannot agree more.
irony to crypto anarchists who are cheering for regulated stablecoins.
I mean, just if you look, I wrote an article about this, but just if you look into Circle, Gemini, and Idbit, Paxos, those are the companies that helped the cryptocurrency ecosystem a lot in recent years, and the cryptocurrency space is built on the ideas that they're now opposing pretty much. They're going against anything that's like censorship resistance. It's one of the biggest things in crypto. But regulated stablecoins are not censorship resistant. They're the opposite of censorship resistant. And I think people don't realize this as much.
Well, something that I've started developing recently is I used to, when I first started ramping up in the crypto space, I always had this big idea of the privacy binary in my head. It was either the current system, which is wrong, or crypto, which is good. And which is very interesting. Like I said, I came from that incumbent system. And I think that there's this entire spectrum of privacy, and I don't want to get too far off topic, that we tend to think about. And I think that regulated stablecoins are kind of a place on the spectrum that has to exist for the incumbent system to build on the decentralized. And it's incredibly optimistic.
I agree with that. I just think it's upsetting that these companies that help the cryptocurrency ecosystem get where it is, are kind of going against it. That's the only thing. I'm not saying it's wrong. I'm just saying it's funny.
Yeah, I mean, this is one of the interesting, it's funny. So the crypto it's obviously, without calling it this, like we've been dealing with like culture issues, right, all year in terms of like some people call it tribalism, like whatever, right? But like there's real questions of what is crypto supposed to mean? And it's political battles, really. If we were like to really identify it, people have different interests, different incentives, different interpretations of what the crypto space is supposed to mean or supposed to be for. And they have financial incentive in those things coming to life. They also have sort of mission alignment incentives. And so one of the things that I think is going to be really interesting to see, and I'm interested in, what you guys think about this, is I don't know that we've totally grappled with just what a radical culture collision is coming as we start to really as this space expands to include some of the biggest institutions in the world. I think you're starting to see it around, maybe the discussion around things like the ETF and what instrument is used and whether it's, effectively creating more Bitcoin than the cap and all this sort of thing. But these are fundamentally different cultures. And so I'm interested to see just, very briefly, do you guys, are you of the opinion that there's going to be a version of crypto or is it going to expand to include lots and lots of different versions of cryptocurrency?
Well, the optimist in me says, well, I left large financial institution culture in favor of crypto, which is inherently more decentralized and therefore more empowering to the masses. But the cynic tends to think that because we are a drop in the bucket, there is a very real chance that institutional entry to crypto could completely undermine a lot of the original cypherpunk tinfoil hat-ish crypto culture that's really developed. So I think it's interesting because we have an internal identity crisis within crypto, and now we're facing this external crisis. And I think you might have tweeted this about how it's kind of bringing together a more united crypto community. So I think that if we as a community can begin to develop a more succinct identity and things we're not willing to compromise on, I think it makes it a little bit easier. But organizing a decentralized masses to agree on something like herding cats. So
yeah, I agree. And I think crypto was built to be inclusive to anyone. So I think it should be able to withstand if institutions enter. If it doesn't, then what's the point, right? It's supposed to be resistant to any of them. So I'm pretty optimistic.
I want to say I do love the dissonance though when it comes down to people cheering for the ETF and then wait, we defeated Wall Street to bring Wall Street back in.
Yeah.
They don't know. It's kind of it's like the space is just the greatest combination of technology, finance, drama, and comedy. And watching it unfold, especially on a hot button issue like the ETF, Wall Street coming in, these big institutions, and watching this wait, it's great, these institutions are coming in, but at the same time it defeats the ideals of this as this sovereign currency that no centralized organization or nation state can touch. That toss-up is just fun to watch.
Yeah, I think it's super interesting. One of the I might have even referenced this on this show in one of the weeks past, but one of my favorite movies of all time is SLC Punk, which is this sort of story of this punk growing up in 1985 in Salt Lake City. And the last scene, he's spoiler alert, he's decided to go to Harvard, like his dad before him, who's a corporate lawyer and stuff. And he says, you could do a hell of a lot more damage inside the system than outside it. And I think it's going to be really interesting to see, it's almost like you're going to have the radicals, right? I don't think they're going anywhere. And you're going to have the opportunists who are just if they're, the existing power structure is enormously good at co-opting new movements to just become a part of the power structure. That's what power structures do, especially when they're money. It's going to be really fascinating to see who are the moles underneath who are actually kind of bringing some of that chaos and anarchy into the existing power system, and how that ends up reshaping. So just as for example, we're kind of way off topic now, but I think that the next thing I want to talk about is Fidelity and institutions coming in. But there's a lot of things that are kind of just properties of the system that are going to be hard to design out of it. Privacy, for example. One of the things that I find fascinating, even with the stupid congressional hearing, which I'm so glad we had more stuff to talk about than that. But one of the things that was interesting is a couple of senators asked questions about privacy, and Peter was able to sort of in good conscience say, well, it's a public ledger and yada yada yada, and not really get into this huge world of emerging privacy tech, which is obviously going to make it dramatically different to trace and track. And for a lot of us, that's something that's incredibly important, right? Those are some of the projects that I follow most closely. But once that genie's out of the bottle, it's kind of, you can't really put it back in, So I think it's going to be it's going to be fascinating to see not just how kind of Wall Street and the existing power structures try to impose their will on crypto, but the reverse happens almost without trying.
You just gotta start punching down on the on-ramps, right? This is a conversation we have internally a whole lot at Stoic, because we have a pretty strongly held investment thesis around Monero. Again, getting but when you think about institutions coming in and regulators coming in, if they can't, you can't really shut down an open source project. Someone will copy and paste the code and recreate it. But the often on-ramps, things like regulated stablecoins or KYC for exchanges that have on-ramps to things like Monero, is where the institutional infrastructure, is both good and bad for the ecosystem.
Rocco, do we have some people who are standing there like they want to jump in? All right, let's figure out how many people we can get in this room reasonably.
I think Mike's just gonna sit on my lap.
Come on in. Right. Gotta cycle them in and out of here. I think this is gonna get.
I think you should just leave it. Turn the table back.
Yeah, let's push this in.
People.
All right, there it is. That's the disruption I'm looking for. Yes.
Oh, my knees.
Oh my God, look it, it's everyone.
The whole crew.
We got a whole crew. Hey, hello fellas. Can you do a little introduction?
Oh, Rob?
Yeah, sure.
Rob?
My name is Rob Paone. I am on Twitter and YouTube as Crypto Bobby. Work full-time at AirSwap in the space as well. So yeah, quick intro.
Awesome.
Frank Chaparro, also known as Frankie Scoops, which was sort of started by
I'm going to take full credit for
Yeah,
that.
he really is the one that
I
started
named
that
you
trend.
Frankie Scoops.
Truly did. After the block reading some editorial stuff and breaking news.
All right, so we've been talking about Tether. We've been talking about what this sort of phase means for just the emerging institutionalization of crypto. And so obviously today's big news that wasn't just the Tether peg going crazy was Fidelity. Frank, can you kind of do the recap for anyone who, I don't know, like was in the hospital today and didn't hear about this?
Or under a rock somewhere in
Yeah.
a country without electricity. What basically happened, and I think I'm in a good position to sort of talk about this story because I've been covering it since I was at BI. I first wrote that Fidelity based off internal job ads I got back in early summer of 2018. But they were looking to hire to build out technologies relating to a digital asset exchange, for digital asset trading, and custody solutions for Bitcoin and Ether. And so that was 5 months ago at this point. And so what they announced today was that they are launching essentially a new business called Fidelity Digital Assets, which will offer custody solutions for Ether and Bitcoin, as well as institutional broker services for hedge funds and family offices. And so what that means is essentially Fidelity's new unit will sit between asset managers that include hedge funds and family offices and the wild Bitcoin crypto market, right? Routing their orders to the best venues that they'll be connected to. So that was the news that broke around 12 o'clock today. Sat down with Tom Jessup, who is the now the head or the brains behind the operation for the full story, which you can check out at theblockcrypto.com.
And done. Perfect. Okay, so let's do a quick hot take on a scale of 0 to 10, 10 being most significant, 0 being whatever. How significant is the news?
So from my perspective, looking and talking to institutional type folks and thinking about what they want and a actual broker that has the institutional capabilities that they see in equity markets. So that's the plus side. That gives credence to what's going on here. To be sure, right? It's not a qualified custodian, so it doesn't have that designation that BitGo has. And I think Paxos and Gemini, with their trust certification makes them a qualified custodian. So they're not there yet. But Fidelity is a huge name. They manage $2.5 trillion actively. And so when we think about a firm with that sort of name and that sort of cachet, that's a big deal. So I put it at like an 8. But it's early days, so it doesn't launch till next year. Things can happen that go wrong. People could leave. That's the thing that we have to remember. In crypto and on Wall Street, people like to announce things before they actually happen. But it is big news.
Speaking of announcing it before it happened, I heard that Fidelity has also inked a deal with Tron. He has Justin Sun has a brokerage account with them, and it's a pretty big deal too.
We're still in the announcement. We're still in the announcement, towards the announcement phase of that partnership. Yeah.
All right, Bobby, what 0 to 10?
I was going to say 8, so Frank is under there.
He scooped you.
But yeah, I mean, I think he did scoop. I think if like the herd is actually coming, it is big news. I don't necessarily know it is actually coming, but if everything that everybody kind of preaches that there needs to be a proper custodian, insurance, all that good stuff for these institutions that are like more legitimate institutions to enter the space. Then yeah, I do think that like 8 out of 10 is probably like the range in terms of the quality of news, just being that the name that Fidelity has.
What about you guys? You're not you're qualified to talk about this too. I'm interested in everyone's thoughts on this.
I'm gonna give it less importance. I'm gonna give it a 7, only because I want to know more details about what their custodial solution is, and like whether they're building it, whether they're gonna co-opt or adopt or buy something that already exists in the ecosystem. Like that unknown piece for me, and how good the custody will actually be from a crypto. I mean, it's Fidelity; they have a whole lot of resources, so my guess is that it won't be good. But once the custody is actually live, then that's like where it becomes like an 8 or a 9.
At the end of the day, I mean, dovetailing off of that, it is still just Bitcoin and Ether. When you think about the average crypto hedge fund or the average family office investing in this, a lot of them are doing the top 50, top 80 coins. And so this doesn't move the needle for them as far as being able to just focus on the investment part as opposed to focusing about the investment part and how do I safeguard these assets.
I mean, I agree with all they said pretty much. I think it's like a 6 or 7. But I think it's important. It's a really big company getting in, and then if they can pull this off, it's going to be really important. I'm not sure if they can 100% exit with all of it. I think it's important for sure.
I think personally, I'll stick to the 7 as well, just for the institutional narrative.
So one of the things, one of the most interesting tweets that I saw about this was Hasu wrote, last bull market was retail trying to front run institutional money. Next time it may be the other way around, which I thought was super interesting. There's kind of this gamesmanship almost where, actually I think Ryan Selkis from Masari today, when they sent out their unqualified opinions about it, he said, he kind of closed it with this like running joke since 2013 that whatever that year is +1 is going to be the year that institutional money comes in, and hey, maybe this time it's actually the real thing. And so one of the things that I think is interesting is how much this, throughout even actually last year, part of the huge explosion at the end of 2017 was the notion that there was going to be this big slew of institutional money coming in, and you wanted to get in before it, right? And so I guess that one of the things that's interesting is, just based on seeing the market's reaction today, like how strong, how reliant on this narrative of the institutional money coming in do you think that the space is right now? Like, is everyone still kind of just waiting for that to happen? Or is more or less everyone just building whatever they're going to build, and that's going to happen and be a force at some point, but it is what it is?
I mean, I kind of said this not too long ago with Anthony Pompliano, and that is, listen, at the end of the day, when Bitcoin ran up to 20,000 after the launch of futures, everyone thought that we had vehicles for retail investors to enter the market, like an ETF or other derivative products that would just launch next day. And obviously that didn't happen because the market participants weren't ready. But even if you have those sort of on-ramps, even if you have things like Fidelity announcing custody or Fidelity announcing brokerage services, if the space doesn't have an investable sort of proposition, right? If you don't have apps that can facilitate active users that top 10,000 people, I mean, I don't know the exact, I think it's a day or a month for Ethereum-based applications. It's the equivalent of having, an amusement park that says, all right, now we have online tickets, but, we only have 3 rides. So even if you have online tickets, no one's going to want to go to that amusement park. In a sense.
Thank you. Well, but I mean, if you think of like what the institutions will invest in, I mean, they might only offer Bitcoin and Ether first, but when I think of at least a lot of the institutional investors I know, it's highly anecdotal. That's probably about where they're going to start and hang out there for a while. Because I think that people have this binary they've assigned like Bitcoin and ETH good, everything else bad, because they don't know how to differentiate.
Or scary.
Scary to lose all my money, and then they lump in all of these other projects with like the ERC20 boom, which is also conflating with crypto and everything's highly correlated. So of course people assume that
And it is very highly correlated. So that makes sense.
What do you guys think of? So one of the things that's been interesting is that obviously the sort of permission enterprise blockchain narrative has been a total no-show for this whole year, right? Like we're over that. in a pretty big way. There's been this general institutional narrative, but it's been very concentrated around access to Bitcoin and Ether premium assets, right? This sort of ETF type things. One of the things that I've actually been kind of surprised about from like a narrative perspective is how, and maybe this is just my impression, but it feels like the security token narrative, like outside of Bruce Fenton, basically, has been on this low hum kind of going on in the background, but it hasn't really been at the center of the institutionalization conversation. Is that, I mean, am I off on that? Do you think that's true? Like, how much are you guys thinking about, I mean, basically, like, if you think that there's a big red A on top of all of the sort of ICO type tokens as it relates to institutional, is there a role for, you know, a next generation of tokens that are more securities like to actually play a role in how institutionalization happens? Or is that so far beyond the core getting involved with Bitcoin, you know, et cetera, that it's just not on people's radar right now?
I think the security token, you know, like, industry or subset is pretty early. Personally, like, we're looking at Bitcoin being 2009 when it was created. I think that's correct. I feel like we're at like 2010 for security tokens. Like the legitimate infrastructure right now is just starting to be built out. I think there are literally 2 compliant security tokens that will be able to be traded in the next month on a secondary market, and that's Spice VC and Blockchain Capital. So there's literally 2 that are compliant and will be able to be traded the next month. And then there's rolling out after regulatory lockups. So I think we're super early on in that space, and I don't think we've necessarily hit like the narrative for like institutional investors and like the value proposition perfectly either. Like, a lot of people are talking about like the secondary liquidity, like this is going to provide some type of liquidity premium, or you know, it's just going to provide liquidity to illiquid assets. And we don't have any proof of that yet because there isn't anything necessarily trading on a secondary market. So I think that's an issue. And it's also 2 other things. Like, number one, the quality of assets, I think, is improving slightly. But initially speaking, I think a lot of companies or a lot of like people in the past 6 months were just trying to like say, oh, this is a security token, but I'm going to tokenize some crappy asset. Like, if it's actually backed by something, nobody's going to, like, people can actually look at the documents and do due diligence on an asset and see it's subpar. So I think that is something like higher quality assets need to actually be the ones, you know, being tokenized for this. I think that's starting to happen. But then also, like, institutions don't necessarily want to hold tokens. Some of them just might be more comfortable holding paper. So I don't necessarily think we're like there yet, but I think it is a trend that's going to continue like moving in the right direction, but it's still super early on.
Yeah, I mean, it's interesting that basically there is one of the interesting ironies of kind of the ICO boom could be that it turns out to have been better that institutions didn't get in and that we burned ourselves out through some of the kind of like the madness, so that we're not basically just trying to have security, you know, STOs for everything that we push to institutions and burn them out for a full generation or something like that.
I wonder if you're going to see the rollover of interest from, like what we talked about earlier with these futility tokens, you know, converting to equity. I wonder if that'll also bring, you know, speculation to securities markets because these tokens are converting in whatever way they're actually converting. If eventually, so take economy, for example, if all the utility token holders of economy, you know, once it gets converted to EICM, I think it's going to be the ticker or something, and there's going to be, you know, an influx of interest now that they've converted their token, and there's another security floating on the market, but it was formerly related to, you know, the speculation behind their quote-unquote utility token.
I personally have like a little bit of doubt that we'll see a lot of speculation on the security tokens, just because I think that when it does come to equity or real estate or whatever it might be, like, there are professionals that can actually do due diligence and perform like accurate valuations on this stuff. So like there is no legitimate formula right now to value Bitcoin, to value Ethereum, to value any of these utility tokens regardless. Like there's no accepted industry standard. For a lot of these security token offerings, there's going to be some type of standard that is already in existence and in place. So I think logically speaking, although the industry, as we know, is not logical, so I think logically speaking, we will not see that level of speculation. At least I kind of hope we don't, but who knows?
I think, my one prediction with the security token market is we're going to see a wave of security tokens, and and then we're going to see a wave of litigation because there's going to be a whole lot of people issuing crappy security tokens without really understanding that they now have a fiduciary duty to these people, and that they have to explain like where their money is going and provide dividends depending on the structure. And you know, equity is equity, whether it's a tokenized equity, whether I literally have a sheet of paper in my closet that says I own a share of Google, whether it's, you know, there's different digital representations. It's still, you know, equity in a company. And so I think that there's going to be a lot of people who get on the STO bandwagon and realize all of a sudden people have legal recourse that they can't come out.
Yeah, you now have introduced accountability to an entire market that has never had accountability.
Yeah, which maybe why people don't embrace it, or people do embrace it. They're all going to get sued because, you know, bad ideas. Like imagine if somebody could actually sue Tron.
I mean, I think what we'll see in that is actually very similar to what is going on in. So the 2012 Jobs Act by President Obama, which the whole point of was to make it easier for companies to tap the public markets through Reg A Plus, is actually not that different than what I imagine an STO sort of capital formation to look like. And all of those, I think about 12 have gone to market. So Reg A Plus is basically raise $50 million, less sort of reporting requirements, and a year ago, there was a lot of questions about how some of these companies were kind of scamming. There was one called Yayo, which was a ride-sharing app. I don't know if any of you guys have heard of it, but basically, for listeners who may not know, Yayo is slang for cocaine. So this was a ride-sharing app that had very...
Tell us more, right?
Well, no, so basically, the founder, we reported on this when I was at Business Insider, had a very interesting sort of background, but long story short, all these Regulation A plus fundraisers are down like double-digit %. And so at the end of the day, you can get that liquidity premium. You could have, as a founder or as a company, an easier way to enter market, but that doesn't necessarily mean that it's going to be the investment opportunity that translates into higher alpha.
Yeah, it's interesting. One of the sort of, I mean, I think that like we're aware of it, but it hasn't been that loud. Kind of narratives that I think is so interesting is how much of the demand for ICOs had almost nothing to do with crypto and almost everything to do with the desire for people to have another mechanism by which that they could participate in these sort of like these massive opportunities to change their own financial or economic destiny, right? They've sort of been grown up with the narrative of Silicon Valley and these tech companies and things like that. And we had these crowdfunding things. And then, like to your point, Frank, some expansion of what equity crowdfunding could do under Obama. But really, it felt like this sort of mystical thing off to the side. And stock markets weren't really a place where you were making money as an active day trader anymore for most people. And, I'm always interested in how much of a pattern and a demand has to do with not necessarily kind of crypto or the asset itself, but a much deeper desire to just sort of, have another thing that gets us out of the doldrums of normal life. And, and I think it'll be interesting to see if that's the case, where that energy goes in a world where there aren't ICOs. And, will there be something to come capture it,
I think that's a good point too, and it's like I think a lot of people saw the Ethereum crowd sales and the other early ICOs, saw the incredible returns, and it is kind of funny because especially the early ones, like it really did. The narrative was like democratizing VC and like really democratizing returns for a lot of these like investors. But at the same point in time, I feel like a lot of people, and I've gotten into like arguments with people about, yes, it did like democratize venture capital in some cases, but especially like recently, like venture capital has incredibly high rates of return and then can go to zero pretty quickly as well. And there's a lot of like retail investors that did not take into account the fact that you could lose 90% or whatever it might be on some of these investments. And it democratized in a good way. And also you got the full spectrum of it, which is kind of funny. And I think people just hear stories of their friends or whoever it is. And I think that kind of was one of the big catalysts for 2017 is, my friend invested in this ICO and made 20x on $1,000, and that just snowballs.
Yeah. I mean, I think there's a risk when you have something that literally can trade like a stock, and has the barriers of entry of just giving you $1, and it's something that you can lose 90% of your money on. I mean, it's liquid venture capital.
Or 99%.
Or 99%.
99.9.
I mean, the break-even multiplier on chain FX is probably one of the greatest tools I've ever seen.
All right, well, you guys are at a party, so I don't want to keep you for long, but a thing I'm starting to do, which I really think is interesting, is asking everyone as we kind of close out, what do you think we're going to be talking about a month from now? Or whatever period, but some point in the future. What are emerging narratives that you're interested in? What are things that we're not talking about yet that we should be? Where are we talking? What are we talking about in a month? We'll just go around the circle, maybe starting with you, Rocco.
What are we talking about in a month? I think, honestly, in my opinion, in a month, we're talking about more Lightning infrastructure being built. We're talking more about block streams, Liquid. We're talking about Bitcoin infrastructure, honestly. I think in a month from now, I think that's going to take control of the narrative for a little bit. As I don't know where the market's going to go, but if there is a period of kind of revival or even down, like either way, I think Bitcoin is still going to be the pervasive narrative of talking about, you know, layer 2 solutions and scaling. Bitcoin's
Love it. Love it. Larry, what do you got?
It's a tough question, but I mean, with the recent, one thing that comes to my mind with the recent Facebook hack, I think we're going to see more discussion about decentralized sovereign identity. I think if people can be the owners of their own identity and basically be in control of the data that they share with people, I think that's a really powerful use case of blockchain that I think is not talked about enough. I think Sovereign is doing a really good job in this area. And there's a lot of good decentralized open source development in here that can help with decentralized hacks. Because whenever you have these large institutions, they become honeypots for hackers because they just simply hold too much data, and it's very tempting for the hackers. But if we move to an infrastructure where each person holds their own identity and basically chooses to share the data that they own with, I think that's really powerful, and I think it's going to become an interesting use case in the future.
So for me, I think a little bit about, like, I guess, broader privacy. So I get the data component. The thing that I'm hesitant about with data privacy is, I agree there'll be a thing we'll be talking about. I don't think next month somebody's going to come up with a data-based solution.
100%.
But yeah, I think that broader privacy and people starting to look at privacy as more than just a binary. I think I said this earlier, but I think that people who look at crypto, do things as either like private or right. For having more conversations about different developments, whether it's data privacy or transactional privacy. I
mean, I really hope it's what I said earlier. Like, if we get the Bitcoin infrastructure built out, that would be great. But I'm worried that we're just going to keep focusing on the next platform that gets institutions on board, whatever that means. But really, there's so much work to be done to get Annie Mae out in Iowa to buy her first Bitcoin. And hopefully, since I feel like those stories and those developments have sort of fallen to the wayside over the past year, we're just so caught up on the ETF and on synthetic derivatives that really, at the end of the day, do not translate into adoption. And so I hope that we see developments there, but I'm not entirely sure. I'm not the best prognosticator.
So we got a hopeful there's adoption story.
Yes.
Bobby, you have one additional question from the peanut gallery. Ryan Selkis also insists that I ask if you've gotten your buffalo chicken fix at the party.
There was not buffalo chicken. I'm gonna have to take that up with Judas. That's a little bit unacceptable. He knew I was coming and invited me here. So yeah, maybe my prediction for next month is the next block happy hour they do. They'll actually have buffalo. I'm bitching about it on YouTube.
And a blue cheese fountain.
Yes, please. Blue cheese over ranch.
There you go.
Wait, do you have a real answer? just because I'm interested.
No real answers. I'm sure you guys covered it. I didn't get a chance to watch the earlier part, but I think at least one thing, like narrative-wise, the next month I'm interested in seeing is like how these utility tokens may or may not actually figure out utility, because I think nobody really has figured that out yet. And I know the conversation earlier was kind of about the futility tokens, and now some of these tokens are maybe transferring to security tokens, which I think will continue to happen, or just pulling your token off the market. Or I think, maybe even the worst case, just kind of pretending like they're working on something and letting it ride off into the sunset, which I think is probably happening quite a bit. So I am kind of curious. I do think that there are a lot of teams that maybe raised money and didn't necessarily have bad intentions, but got caught up in like the payment token hype or cycle or whatever. And are now trying to figure out how the hell do we have value accrue in this token. So that's kind of one thing I'm curious to seeing, if that's with governance, which I'm kind of doubtful of, or if it's some other type of mechanism that somebody like Rocco is working on. I don't know. But that's what I'm curious in watching the next month, because I do think that's going to continue to accelerate in terms of the narrative.
My personal favorite quote from that article was some of the the Bitcoin guys were saying 4 down, thousands to go. And honestly, I would love this kind of like raised earth scenario of a lot of these tokens in 2017, like having this conversion, because it would make an interesting narrative for the next month.
All right. Well, we are in transitional times, it sounds like. You guys are awesome. Thank you so much for taking some time out from this party and joining. This is great. I hope you guys stick around and get to have actual fun.
Thank you.
Awesome. See you guys.